if you're not in one already. I got to go look up the technical definition and check to see if we're officially in the bear market. All right, so let's see. Next, the next question is okay. Here we go. Okay, from Eric. Eric is asking about the A, B, and C. Yeah, Eric. Okay, so you asked about your A, B, and C tickets. Yes, the All Black National Convention is going to happen the weekend of October 30th. It's going to be in Charlotte. The tickets will go on sale in about a month and a half. It's a really great gathering. It's kind of the B1, the ultimate gathering of all B1 people, around the world, where we do everything from have breakout sessions on crypto and how to start a business, all the way to panels on relationships and politics, and a lot of fellowship happens. We have a lot of fun with speed dating. That was really fun last year. Space Turn. We have the B1 Gala. Just a lot of cool stuff. So if you want to join us at the convention, just so you know, we're probably going to sell out because the last convention was so great. Everybody heard how great it was. So we literally almost sold out with the pre-orders, right? So once the tickets go on sale, the venue, we're going to get the biggest venue we can with the budget that we have. So if you'd like to join us, we'd love to have you. Eric, if you have a question about your ticket or anything like that, just email support@theblackbusinessschool.com. That's support@theblackbusinessschool.com. Also, I took a screenshot of your message about your ticket and I sent it over to the team to make sure that they address you directly. So thank you for your question, and I look forward to seeing you at the convention. All right, so next, Lydia says, how do you properly place a limit order when the price is 0.01 for the contract and the bid-ask spread is 0.0/0.48? Mid spread suggests 0.25 and was rejected for writing a cover call on SWN. Okay, so Lydia, I looked up that, I think the company Southwest Networks or something like that, and I looked up that particular call option. It looks like maybe you were trying to write a cover call for 1 week from today, maybe, and the price was really low. It was a penny. Basically, it's hard to buy and sell at that level because you're really talking about a market that's what they call thinly traded. When a market is super thinly traded, it's really hard to do anything. It's hard to sell. It's hard to buy. It's like I compare it to, like, I love thinking about the analogy of like getting on the seesaw. Has anyone ever gone to the playground when you were like 7 and there was nobody else there, but you really wanted to play on the seesaw? How many of y'all ever tried that, where you went and you thought maybe because you're 4 that you could get on the seesaw by yourself and make it work? And then you learn quickly that it doesn't. Like, so you get on it by yourself and then you try to jump and it just doesn't work because there's nobody else on the seesaw. I don't know if anybody else ever did that. Maybe I'm the only weirdo. I don't know. But anyway, going into a market where there are no other participants, where everything's thinly traded, because it's just not a place of interest for other investors, it's a lot like getting on that seesaw when there's nobody else at the playground. You got to have somebody to play with. You got to have somebody who will take the other side of that bet, so to speak, right? And so right now the problem with what you're referring to is that the reason your bid-ask spread is so massively high compared to the price of the asset is because the market is pretty much non-existent. I don't even know why it's even listed, because I don't think you can even really buy that particular option. So you may want to move into a space that has a few more traders. So maybe you're trying to do business in a little tiny town with a population of 500. Maybe go to this next city over that's got 10,000 people, 20,000 people, and then maybe you'll find a little more activity, right? Or you go to the club and you go to the club and you see about 5 people in the club. Well, what do? You leave and you say, let's go find somewhere else where there's more people, where there's more girls here, more men here, whatever, right? So that's what I would say when it comes to your trades. Now, let's see. The next thing I want to hit on again is so we mentioned earlier, we were talking about financial anxiety and the prevalence of financial anxiety. And I did that survey I mentioned to you guys because I love to constantly study how you guys are feeling and what you all need and what you're trying to solve, the problem you're trying to solve. And so I was really surprised when I saw that 75% of the followers that are on our platform feel some sort of financial insecurity. And so here's what I want to do. I want to do a very quick Dr. Boyce kind of 5-minute deep dive into this so you can kind of understand it, because financial psychology is very interesting. It's always been a fascination of mine. And one of the things that you should understand about wealth and money is, and don't let anybody tell you different, wealth is very psychological. People that think about money in a certain way tend to have more money. And it's not just things that are just spiritual, like, oh, I believe in abundance. Some of that does matter for sure, but a lot of it is also your optimism as it pertains to your ability to acquire money. Confidence is extremely important. Right now, for example, investor consumer confidence is very low. That's why your stocks are down. Investors don't feel optimistic. That's why your stocks are down. Investors are not willing to take a risk. When you're feeling confident and optimistic, you'll take a chance. Think about it. If you're about to go bungee jump and you're feeling good and energetic and you feel like everything's safe and it's going to be great, then you'll jump right off. Woo! Maybe not, right? But you're more likely to jump if you know that everything's going to be okay and it's going to be a blast and you're already feeling good. Maybe you had a drink or two or whatever, right? But if you're feeling unconfident, or you don't want to be bothered, or you're feeling insecure, you're not sure if the rope's going to work or not, right? You're not going to jump, right? So right now, investors aren't willing to jump. A lot of investors that were very confident a year ago are feeling very anxious and upset right now because their stock prices have just plummeted, and this has led to some anxiety. So let's talk about some of what you might be feeling right now, so we can kind of talk about just sort of ways to kind of view it that might actually help you with this. So they say common. If you look up anxiety, common anxiety, the definition of anxiety. What's the definition? It's a feeling of worry, nervousness, unease, typically about an imminent event or something with an uncertain outcome. So you have something coming up, you don't know how it's going to work out, something or whatever, and so you're nervous about the outcomes one way or the other. So right now, perhaps you're worried about what's going to happen with your finances. You're worried about what's going to happen with the stock market. You're worried about what's going to happen with your economic future. Some symptoms, common signs and symptoms of anxiety: feeling nervous, restless, or tense. Maybe you're waking up in the middle of the night because you're not sure, what's going to happen with your money. I get that. I totally understand that. Having a sense of impending danger, panic, or doom. Having an increased heart rate, breathing rapidly, hyperventilation, sweating, trembling, feeling weak or tired, trouble concentrating or thinking about anything other than the present worry. Well, the first thing I would suggest is acknowledging the parts that you can control, the parts you can't control. If you're talking about financial anxiety that comes from investing, just know that the anxiety it does lead to a toll on you. It does make you feel a certain way, but it doesn't change what's going to happen when it comes to things like investing in the stock market. If the anxiety is too high, if you're feeling too stressed out because you looked at your every day, you look at your portfolio and you see it going up and down, up and down, up and down, it's okay to look away. It really is okay to look away. Even I do that to this day. It's like there are times where I start finding myself getting too bothered about what certain stocks are doing or whatever. I'll do what I can. If that means making an adjustment, I make the adjustment, and then I just look away. Because here's the thing: if you were able to do that, say 5 years ago, and just let's say you just said, "Look, I'm going to buy $50 worth of Bitcoin every week, no matter what, no matter whether the price goes up or down or whatever, and then I'm going to buy $50 a week of Apple every week, no matter what." You would have a ton of money right now. But if you were allowing the changes and fluctuations and the drama of Bitcoin to cause you to make too many adjustments, you would have really blocked your blessing, so to speak. You would have killed your ability to have wealth. And Black people, unfortunately, and a lot of people do this, but I care about Black people. That's what I study. That's what I pay attention to. John Rogers, who's a billionaire out of Chicago, very nice guy. I met him. I really liked him. He wrote a great article about the 2007 2008 market crash, and said Black people probably walked away from about $1 trillion because we allowed our financial anxiety to get the best of us. We allowed our financial anxiety to cause us to run away as opposed to simply sticking it out, right? Sticking it out. Typically sticking it out with your predefined strategy, it tends to work well in investing. It tends to work well in relationships. If every day, believe me and my wife have some crazy days where I'm like, oh my Lord Jesus, what woman did I marry? I'm sure a lot of married people in here understand what I'm talking about, right? But when you stick it out, everything, a lot of those things eventually go away, right? Or my kids come home talking crazy and weird stuff starts happening. I don't freak out, right? So ultimately, what I would encourage you to do is, if you don't have coping mechanisms, go find out what those mechanisms need to be. But also remember, when you're talking about this financial anxiety, a lot of it is inherited by pre-existing conditions in our families that are remediable. Is that a word? That can be remedied. How about that? That can be fixed, right? They can be fixed with thinking about things like inheritance, thinking about things like insurance, thinking about things like making sure your kids are financially literate. No, your kids should not know how to play a sport and not understand how to invest. Your child should not know how to twerk and not know how to buy a house, right? So shifting those value systems is important, because a lot of financial anxiety comes from a fear of the unknown. Well, what are the unknowns? Well, part of the unknown is you just don't know what the future is going to hold, right? That's fine. Like, God knows that, right? We don't know what the future holds, right? We can't control that. But the other fear of the unknown comes from just a lack of knowledge. I fear my financial future because I don't know how to get money. I don't know where the next dollar is coming from. And so what then happens is, when you have that unknown, and that unknown is causing you anxiety, you tend to turn toward anybody and anything that can help you alleviate that anxiety. Well, what do we do as Black people? Because many of us don't know where money comes from, we don't know how to invest, we don't know what to do to build wealth, we turn to the white man. The white man says, "Oh, don't worry, Mr. Negro, I can get you the money that you need. I can help that anxiety go away. Just come work for me." So effectively, you are paying a huge price. The price is additional anxiety that comes from racism on the job. It comes from being stuck in a life that you didn't want. It comes from all the stressors that come with, and I'm not afraid to say that working with white people was hard for me. I didn't enjoy it. It was humiliating, and they were mean, and I didn't understand them, they didn't understand me, and I didn't hate anybody, but it's like, good Lord, this racism thing. I ain't signing up for none of this. So the way I was able to help try to alleviate some of that anxiety was, I said, I need to go out here and figure out how to do something on my own. I need to go out and figure out how to start a business, how to get together with other Black people that I can network with. Whatever it is, I have to solve this problem. So a lot of your fear of the unknown should lead you to say, how do I reduce the size of the unknown territory in my life? If you are going, I'm going to tell you like this. I'll say this and I'm done talking about this topic. America is a capitalist society. There is hardly any factor that drives American life more than money and wealth. Money and wealth is literally the number one factor that drives everything that happens in this country. It is why we go to war with other countries. They tell you that it's about democracy. No, it's about the money. That's why we're talking about Ukraine, because it's about the money. It's the reason that we don't fund our public schools, because little children don't have any money. It's the reason that you see things that you see on TV. It's the reason the culture goes in the direction that it goes. So if you're in a world where money is that important, then the best way to have any sort of empowerment in that world is to learn every single thing you possibly can about money and make sure your children do too. So, you know, don't pass that curse of financial anxiety to your kids. Make sure you prepare them. Minimize the amount of unknown territory. Okay. All right. So give me a yes in the chat if you get what I'm saying. Let me know if that was helpful. I hope that helped you. So anyway, let me move on. I got a couple more of your questions. If you have a question and you're in the Zoom, put your question in the chat, or not the chat. I'm sorry, in the Q&A section. I'll answer it there for sure. Let's see. Natasha says, "Hey, Dr. Boyce, I know you like the S&P 500 Spider as a great way to diversify. What are your thoughts on the Vanguard Total Stock Market Index Fund?" I like it a lot. I think it's great. It's low drama. It's like marrying, like, a really intelligent doctor who knows how to have a healthy relationship. Your life might be a little bit dull, but you ain't gonna have you ain't gonna have strange baby mamas showing up at the door. You're not gonna have, people getting shot inside your house. You're not gonna have, bankruptcies in your future. You're gonna have a nice, sturdy, stable life. So I'm telling you, ladies, if you ain't married yet, don't overlook those boring guys. Those boring guys will give you that stability. So that particular fund you mentioned is what I would call the boring guy, right? The engineer or the corporate guy. He's not the thug. He's not the guy that just got out of jail. He's not the guy that might, shoot your neighbor. So he doesn't have that edge to him, but he will make sure the bills are paid and that your kids are in good shape and that your family is safe. So there you go. Make of that as you will. All right. So let's see here. Samantha is asking about Enbridge Oil Company in Canada. Now, okay, so Samantha, since you just submitted this question, I can't. Well, maybe you didn't. I'm looking at the date, so I think I just missed your question, Samantha. So my apologies. So let's look it up together. Enbridge Oil. Let me look at the company. What I'm going to do is give you my assessment, my rapid assessment of this company, and I'm going to share my screen and give you guys some insights into how you might process a stock that you see. Okay, so here's Enbridge Oil. Let's see, it's a multinational pipeline company headquartered in Calgary, Alberta. The 1 year return is 19%. Over 5 years, about 5%. So it's done really well in the last year. It had a plummet right here. Look at that. I don't know what the heck happened. That's right, COVID and all that. Okay, that makes sense. And then it started a slow climb after the pandemic, so it didn't immediately recover from the pandemic. The company's been around for a while. It looks like the price earnings ratio is 19.41. That is the price divided by the earnings. A high price earnings ratio is pretty much what they would call a growth stock, a company that's expected to keep growing quite a bit. It's a nice dividend yield, 6.2%. That's solid. I mean, that's better than a savings account. But you have some volatility in the stock price. But sometimes buying these stocks that have a certain dividend yield can actually give you a good replacement for a savings account, which will pay you no interest. But a dividend yield of 6.2% means you'll get a little bit of money from the stock, but it's kind of hard to live off your dividends, and because you have to have a lot of stock to really live off the dividends. So a lot of people just reinvest it automatically. The company's worth a little bit less than $100 billion, so it's not a tiny company. So let's see what's it been doing the last 5 days. You've had a little bit of a dip the last month, a little bit of growth. It looks like a nice, stable company. I wouldn't be opposed to investing in it. If you bought into this company, I wouldn't say, what the heck is wrong with you? This is crazy. Let's see. When you look at quarterly financials, it looks like, okay, the revenue grew by 25%. Wow, that's a big deal. Net income grew by about 3%. So when the net income grows very little and the revenue grows by a lot, that typically means the company is in what they call a growth stage. That means that they're investing a lot of their profits into additional growth. They call that the plowback ratio. Plowback ratio is where imagine somebody who is making money and working at Burger King, and they get $300 a week, and they take $250 out of the $300 and they're investing it in their business. Well, they're going to stay broke. They're going to have their cash flow is going to be low. It's going to be easy to look at that person, somebody who doesn't understand financing and all that, is going to say, why are you broke? You must not have any money. But they don't understand that the reason they appear to be broke is not because they don't have wealth. It's because they don't have cash, right? A lot of companies that are trying to grow are very low on cash because a growing company eats up cash the way a newborn baby eats up all the food in the house, right? And so ultimately, this person that's working at Burger King making $250 or $300 a week, investing $250 in their business. If you're smart, if you're playing chess and not checkers, you'll say, okay, I want to connect with this guy because he's probably going to do well long term. Why? Well, because he's investing right now. So a lot of these companies that maybe have low profits or no profits, but high revenue, the reason they have high revenue and no profits in many cases is because they're pumping all that money back into additional growth, right? So that's why it's naive when you hear media say things like, "Oh, well, he must have been a bad businessman because his companies didn't make a profit." That people who say things like that honestly don't understand business very well. A lot of business owners don't want a big profit because they don't want to pay taxes. Which kind of sucks that they don't pay. That's why America's in so much debt. But that's the game. They don't want to pay taxes, and also a lot of them are like, no, I want to pump this money back in so that I can actually, have more long term. It reminds me of back when I was in college, and I was a little bit of a nerd. I wasn't a complete nerd. I mean, it wasn't so much of a nerd that I was a nerd. I was more of a misfit. Like, to me, a nerd is like some guy with, some geeky guy with glasses who can't really, navigate through the world, kind of a wimpy guy or whatever. I wasn't like that. I was a great athlete. I think I was a great guy. I tried to be. I was very active. I didn't have fear of anyone or anything. I had friends if I wanted, I could have had more friends. I just didn't care about having a lot of friends because I was focused on my goals. But back at that time, I remember I was in 100% growth mode. And that meant that every spare minute I had, I spent that time studying so that I could one day be somebody. I'm talking about when I was 19. And a lot of people didn't get it. I had girls that would pass me over because it seemed like I was broke a lot. Well, it's because I was putting my money toward things like education and books and all that, or maybe they thought that something was wrong with me because I was in the library all the time. That's because I was investing in my future. But I remember I had a girlfriend one time, and her mother said something to me that was really interesting. She said, I don't know if you're going to be rich, but I know you're going to probably have money. And that was an accurate statement because what she saw as a 45-year-old woman was she saw a 19-year-old black man who was investing for his future, right? She saw how much I was studying and how much I talked about the future. And so ultimately, that can happen with companies as well. Companies that don't have the highest profits but have growing revenue tend to be companies that are really growing like crazy. The problem that you have right now, the reason a lot of stocks are getting hammered is because you have a lot of companies that were low profit companies or no profit companies that gave the impression that they were growing, but many of them didn't have any revenue either. They got their cash flow from the bank, right? So some venture capitalists would give them access to $1 billion so they can go hire all these people and build this company that's eventually going to start making a ton of money. But not only was their profit negative, but their revenue wasn't even that high, and their revenue wasn't really growing that much. Companies like that pretty much got hammered. A lot of these companies maybe were SPACs and things like that. A lot of those companies been go away. That's why in this economy, when realness matters. Are you really making a profit? Are you really able to grow? Are you really able to generate the cash flow, not from bank loans, but from consumer sales that will fund and fuel the growth, that will give the investor the incentive to hold on until you become profitable? You're not faking it till you make it. You just haven't made it yet, but you certainly aren't faking it, right? Companies that fake it till they make it, to me, are the companies that have a ton of debt. They're not really making a ton of revenue, and their profits are extremely negative. Those are bad investments because at that point you're just rolling the dice and hoping that one day they'll figure out how to make money. So just keep that in mind. You put companies in different categories. Okay, guys. So in here in the Zoom, I see your questions in the Q&A section. And by the way, if you want to get access to any of these lectures, I mentioned it earlier, I mentioned it again, I mentioned it regularly in class to make sure you guys know. You can log in at theblackstockmarketprogram.com. That's theblackstockmarketprogram.com. Or you can go to my website, boycewatkins.com. There should be a link there where you can click that link and come into the stock market investing class. Just so you know, the benefit of being in the class is that I answer the questions from the students. You guys get top priority from me because you're supporting the school. So I support you by giving you access to my brain. If you give me a question in advance, I will look it up for you. I will research that stock for you. I will give you my 2 cents. So I want to make sure you guys know that you are that you guys are helping us to pay the bills in the Black Business School. So we want to make sure we help you in every way that we can. And also feel free to email support@theblackbusinessschool.com to let us know other ways that we can help you. Okay. All right. So let me keep going. And thank you, Chanel, still, by the way. Chanel is, without her, we couldn't do any of this. She makes it all go. And I'm gonna tell you, she's really a huge asset to the Black Business School. And she's right there in the chat, talking to you guys directly. So if you have any concerns at all, talk to Chanel. She'll make sure you're good. All right. So Kim Hitchcock, what is an accredited investor? Why is it needed? If you have the money, is it to keep us out of good deals?